welcome, Mr. Vijay, and thank you for joining us. To what extent do you believe that the drops that we have witnessed in terms of gold is a matter of profit-taking after witnessing the record highs for gold?
Yes, absolutely. It is profit taking. We have seen a stellar run up this year. Gold is up almost 20% for the year. Small corrections of 3 or 4% are expected. However, the speed at which gold has moved up this year, it does look like a much deeper correction also should be expected anytime soon. Given the geopolitical situation right now, that we could actually have wars ending very soon, it is a good possibility that gold actually might fall back to the 2700 or even 2650 levels. Those will be good entry points for people to get in who have missed the rally. However, gold does look very bullish on the overall perspective. It might just have a small correction before it starts the upward trend again.
Mr. Vijay, a friend called me from Zimbabwe yesterday and asked me, when it comes to gold, he wants to purchase a real estate in Zimbabwe, but at the same time, he has some money that he wants to invest in gold for 1 year before purchasing the real estate. Would you give him the advice to do so, or do you believe that this is not a strong opinion?
Absolutely. I think there's a dual play here. If somebody is an investor from Zimbabwe, him buying gold is not just buying the yellow metal, also buying the US dollar along with it. So yes, it is a currency hedge also for an investor from that country. It does make a lot of sense to buy gold, wait for a proper dip, around 2700, 2650 will be a good entry point. We do expect gold price targets to hit 3500 by the end of the year. We will see the pace of the upward movement to slow down a bit for the short term, but overall, yes, it is a very good investment, and for a 1 year's time period, it makes complete sense.
And for someone who wishes to invest in a real estate or in a cheaper commodity that is affected by the increase in gold, would you advise silver?
Oh, well, I think more than silver, more than industrial metals on silver, I would say a palladium is a much better metal to get into. Palladium levels are quite cheap. Platinum being one of the things we are also looking at very, very closely. But palladium is where we really feel big demand is going to come in this year. We do feel prices are going to move up by at least 35 to 40% this year. So palladium is definitely a better investment. Silver does look at times that it is going to break out above those levels, but then somehow resistance points always keep catching up with silver. So till we don't see a break above 36 on a in a proper manner, I think we will definitely be more bullish on palladium and gold before we get into silver.
What about copper?
Well, copper
The
is...
US president has ordered a review when it comes to copper, and to what extent do you believe that the imports of the US in terms of copper could be actually at risk for national security and for the economy in the US? What do you believe to be the reading for the copper prices?
For copper prices, we do believe that the prices are not as undervalued as some analysts are predicting. We feel copper is well placed unless and until we really see a demand surge coming in from China. I don't think the metal can move much higher from current levels. However, that being said, we are seeing a Chinese recovery coming in. We are seeing the Hang Seng Index as well as the Shanghai Index trying to have breakouts on a daily basis, and it looks like a sustainable rally, this one. So yes, if a China recovery does come in, we can see copper prices moving up further. But however, as an investment, copper would not be the safest investment at these levels.
Thank you very much, Mr. Vijay, for joining us. It was a pleasure having you from Century Financial. Thank you, sir.
Thank you so much.